For centuries, our economies have been dominated by trillion-dollar firms run by faceless men who decide the directions of our countries with no input from the common man. But for the last 30 years, this dynamic has shifted into a new direction, one of venture capital, where those who fund the companies of the future also decide their directions and thus where everyone else ends up. With the explosion of tech firms across Silicon Valley, this has never been so prevalent, and time after time as power coalesces, it moves towards a single form, Sequoia Capital, who hold the reins behind tech firms the world over. For years, they solidified their grip on everything they could, but over the last few months, that grip has started the process of loosening, and events have reversed years of their domination. Now we stand at a crossroads as the collapse of this megalomaniacal firm begins, and we get an inside look into just how insane this whole story is. Though we must be careful because this story is not yet over, and there is a strong chance this goes in the wrong direction altogether and we find ourselves under their influence once again. This is the story of the collapse of one of the biggest controlling firms across Silicon Valley. But who actually is this firm, and who are the people behind them? And finally, but most importantly, how much power do they really hold? Sequoia is as embedded into Silicon Valley and the tech world as you can possibly imagine. They've been around from the start, funding entrepreneurs and buying up huge stakes in the companies which would go on to take over the world. They helped forge PayPal into the biggest fintech firm the world had ever seen. They funded Reddit as it grew into the largest forum site on the internet across the entire Western world. They forged Tumblr up into a massive social media with hundreds of millions of users and were integral in the creation of WhatsApp and Zoom. They even played a part in the creation and crazy growth of Google, Yahoo, YouTube, Instagram, and LinkedIn. If you have a smartphone, if you have a computer, you operate within the ecosystem Sequoia helped to create, and if you're watching this video on YouTube, then you are literally inside their ecosystem as we speak. And this is the fundamental problem with this firm, and this is where everything starts to fall apart, because Sequoia isn't happy to just make billions of dollars. They want to change the world, and not for the better either. You see, as one of the biggest, most powerful venture capital firms in the world, they hold huge levels of influence on the tech industry as a whole, and they have been spearheading the corrupt ESG systems which have been used to help line the pockets of the rich and ensure businesses whose values don't align with this bankrupt idea aren't able to acquire funding. Getting money from Sequoia isn't the only way they help people. They have networks across the entire industry, and they have eyes and ears of everyone important as well. So when they claim that carbon credits are a good thing, millions others suddenly adopt the same position. When they claim positive discrimination or racism is okay, thousands of other businesses listen, and this has been directly impacting the world for years now at this point. ESG is nothing more than a scam designed by those in charge to keep everyone else in line, and if you dare speak out, well, suddenly your ESG score drops off a cliff and you can't possibly raise any more money, and for a tech company in this day and age, that is a death sentence. But ESG has been well and truly exposed, in part thanks to independent journalists, but also from highly public failures of the entire system like the FTX collapse, which involved Sequoia to a much greater degree than you probably realize. Now, Sequoia may be struggling, but they are a key part of a new wave in VC, a space expected to at least double by 2028, potentially up to $700 billion according to a researchermarkets.com report. And after a 90% drop in VC exit activity last year, many are wishing they can invest now while everything is slow. But the problem for us, it's near impossible to get in early when the real money is being made, as this sphere is reserved for the elites. But this lack of access isn't true for all markets on the upswing. In fact, plenty of you have already gotten access to a growing market like this thanks to our longtime partner Masterworks. They've been at work for the last few years in the alternative space, selling $45 million in fine art in 2022 and distributing the net proceeds directly to investors. Their collection is constantly growing because the billionaires haven't bought it all up. The global value of art is expected to grow an incredible $1 trillion by 2026 according to Citi, which means there's still time for everyday investors. Masterworks' platform can even link to tax-advantaged retirement accounts, or you can go the retail route and use their mobile app and website like I've been talking about forever. Now, each of Masterworks Masterworks' 13 exits so far have returned a profit to their investors, with several sales already this year. Paintings can sell out in hours, not days, but right now you can get priority access to skip the waitlist below. We all know what happened with FTX, so I'll save you all the trouble of recapping every little detail. In essence, FTX grew to tens of billions of dollars in valuations, with even more than that in assets under management. Only they didn't manage their customers' assets, they stole them and gambled them on the crypto market like a bunch of degenerates, so when the crypto market started to fall apart, all this money that they'd taken out from their customers' bank accounts started to disappear, and what's even worse is that they took out billions in debt to gamble with as well, so the company was well and truly screwed and everything fell apart, as we all know. But what you probably don't know is how Sequoia had actually been an investor with FTX for years, how they helped the company to grow and how they helped FTX manipulate the ESG system to draw in even more capital from other investors, which FTX would then go on to steal anyway. And where exactly does Sequoia come into this? Well, they were heavily invested into the firm, with reportedly losing over $200 million when FTX finally collapsed, which alone has been enough to massively dent their reputation and convince many investors and business owners that they ought not be as well revered as they were. But their involvement went further than simply sending some cash over in that direction. It turns out they actively encouraged everyone they could to use FTX in a reckless display of their influence. Sequoia, it turned out, had written numerous puff pieces about FTX's founder Sam Bankman-Fried, and they not only published them onto their own websites, they circulated them around the internet on other publications too, in an attempt to give SBF more legitimacy in a corrupt attempt to force their investments higher. But news articles weren't enough, so Sequoia went one further and ran interviews with SBF that they then publicized under the title The Unstoppable Rise of SBF, and in those interviews they of course encouraged everyone they could to put their cash into FTX, where it was promptly stolen. And as a final cherry on top, Sequoia's founders and managers members took to Twitter to throw as much light and legitimacy onto Sam Bankman-Fried as they could, because apparently their manipulation of traditional media wasn't enough alone. And almost as an admission of guilt, Sequoia have gone around deleting any evidence of these posts they can to try and hide their past actions. Not exactly a good look. Those people that followed Sequoia's advice are now reportedly upset, as they've all lost all of their money and there is no chance in hell they're going to get it back either. And to make matters even worse, Sequoia Capital is being sued by a massive class action lawsuit, as they directed people towards FTX, told them their investments were safe, only to then have them stolen away from what they thought was a legitimate organization. And the craziest thing about this lawsuit is the rumors that Sequoia Capital might actually settle the lawsuit for the courts, because they aren't so sure that they're innocent, and this public press from a public court battle would be absolutely devastating to them. But even more interesting than that is that if Sequoia settle that lawsuit, that opens up the floodgates for all of these corrupt VCs to be sued for their failings, and with the amount of outright frauds we're seeing in these market these days, this could change venture capital forever and hammer them down until they're a shadow of their former selves. Now, what could possibly be worse than losing hundreds of millions of dollars and then being sued by numerous different people because you helped the very person who stole your money steal other people's money too? Well, perhaps being involved in one of the largest American banking collapses in history, and yes, you guessed it, Sequoia have their hands dirty when it comes to SVB as well, but it doesn't even stop there, as they were all over First Republic Bank as well. These are the second and third biggest banking collapses in American history, and Sequoia was involved in both, so I really can't stress enough how bad of a year 2023 has been for them. It turns out that SVB last year had raised $2 billion to support other venture capital firms, and they threw $234 million into Sequoia, giving them ties closer than anyone had actually realized. And as if that wasn't enough on its own, let's not forget that First Republic are tied up in this mess as well. Back in 2009, Bank of America spun off and sold First Republic to a group of investors, including, of course, Sequoia. This was weird at the time, as this VC firm is supposed to focus on tech, and it was obviously still weird recently, as I found an article from back in 2020 establishing exactly why this investment made no sense and why it still makes no sense today. And Sequoia's problems haven't just been limited to scandals and banking failures, though of course those have been devastating. Some of their darling investments have been getting hammered recently, and there is no better example than Klarna, the buy now pay later company dominating that space, Except it turns out this market is massively oversaturated and it's impossible for any firm to set themselves apart, so profit margins are being ground up into atoms. The firm was being massively overvalued by VCs, notably like Sequoia, who were investing into it at a valuation of over $45 billion, whereas today, private markets are only willing to pay 15% of that, less than $10 billion. And this is of course in the private markets, where price collapses like this are supposed to be tamer and take longer to happen, but this is the state of VC and private markets in this day and age. This is the state of Sequoia in 2023. They're a mess, with the only headlines they're getting being distinctly focused on their failures, and their reputation lies in tatters. The next stage of all this is the slow but sure erasure of their influence and a gradual but very real reduction in their ability to change the world, as they've been trying desperately to do. How can anyone take a firm like this seriously when they claim to be focused on good governance after they spent so much time and effort helping a thief like Sam Bankman-Fried? How can anyone trust their judgment when it comes to financial markets when they've been involved in 2 of the 3 largest banking collapses in American history? And why would anyone want Sequoia to invest in them when their darling love child Klarna has seen a catastrophic fall from grace? We are all well and truly watching this overbearing firm, which is the core of the elite and powerful, fly too close to the sun and crash into the sea, hopefully to never be seen again. If you want to hear about how BlackRock is on the out, then watch this video here, or if you want to protect your investments, check out Masterworks here.